can go ahead and,
Okay.
I'll call our Finance Committee meeting of October 19th to order. Commissioner Stevens couldn't be with us today, but we do have a quorum between Commissioner Cook and myself. And we have no one to offer comment from public, so I'll move into the agenda. We have item 1 that we can go ahead and address, which is the minutes for the last meeting.
I'll make a motion that the minutes be approved as presented.
And second, any comments? Hearing none, all in favor?
Don't call me.
Passes.
Don't call him yet? Okay, you tell me when. I apologize.
And item 2 is getting ready to dial in for that.
Well, he doesn't have to dial in for that unless there's questions, right?
We've got it on standby. I wanted to let you know that it was a
Okay.
possibility, or did you say that we will call?
He's prepped that we will call, but I can quickly tell him.
We'll see what kind of questions we get, so we're not wasting his time.
Oh, you're right.
Yep, so with that, Trav, you're up to bat.
Frank, if you could go with the mouse.
Yes. I say I am. You have a mouse there as well.
Perfect. Well, good afternoon, everyone. Great to see you all again. My name is Trey Scott with Malden and Jenkins. I was the partner who oversaw the audit of the Commission's June 30, 2022 financial statements, and pleased to be here with you all this afternoon to discuss the results of that audit. Just real quickly about Malden and Jenkins, we were founded a little over 100 years ago, have offices, 12 offices throughout 5 states. The office that serves the Commission is our Savannah, Georgia office. We provide over 120,000 hours annually to our governmental clients, and approximately 650 governmental clients that we serve to date, and about 100 of those have some sort of water and sewer function or a standalone water and sewer fund like you all are. I think of particular importance to you all as it relates to our audit is our independent auditor's report. I think, as you all know, those financial statements are the responsibility of management. It's our responsibility as your auditor to provide an opinion on those financial statements based on our audit. We do that by following government auditing standards, and I'm pleased to report to you all today that we issued the Commission, or will issue the Commission, a clean opinion, what we call an unmodified opinion. What that basically means is that your financial statements present fairly the financial position, the results of the Commission's operations as of June 30, 2022. And that's certainly what you're looking for, is a clean opinion. We also had no audit findings, no management points, and that's definitely a testament to the hard work that the Finance Department, all of the folks at the Commission, really, the Finance Department in general, folks we work primarily with, do on a daily basis, and certainly something they should be commended for. If we move on, just talk a little bit about your financial statements themselves. Our assets increased this year again, up about $37.6 million. About 20.3 of that increase were an increase in your capital assets. Our liabilities also increased this year, up to about $76.3 million. And that increase was about $29.4 million over the prior year, but if you do recall, we did issue some additional debt this year in the form of some GFA loan draws and the bonds. And that increase in your liabilities, 28.1 of that was increased to your long-term debt. Oops, went a little far there. If we take a look at your income statement, your P&L, or what we call in the governmental world, your changes in revenues, expenses, and changes in net position. Revenues are up again this year, about $1.4 million over the prior year. Expenses are also up a little bit, about $1 million. And your operating income, so the difference between your operating revenue and your operating expenses, is also up. It was about $9.7 million this year. So again, these are really good trends to see. Expenses were up a little bit, but that's not concerning to me, considering your revenues actually increased at a greater rate than those. So we take a look at your non-operating section, so outside of your water and sewer charges and then those operating type expenses, there are a couple of lines in your income statement. One of those is a loss on investments of $1.2 million, and then you also had interest expense of about $1.6 million. But ultimately, the change in your bottom line, your equity, your net position, was $8.2 million, so an increase to your bottom line of $8.2 million this year. So again, always like to look at cash flows too, to kind of see what's going on, where's the cash coming from, where's it going. Operations should be driving that cash that's coming in, and that certainly was the case again this year, to the tune of about 16.8 million. But where did we use the cash? I always like to see us reinvesting in our system, and we certainly did that again this year. 25.3 million in purchases or improvements, increases to your capital assets. Paid about 4.2 million in debt, principal and interest payments. Also had some proceeds from that debt that we mentioned of about 28.3 million. All in all of those changes flowing through your statement of cash flows increased your cash by 4.7 million up to 27.9 million at June 30, 2022. So good trends with the numbers as far as I'm concerned. Your footnotes didn't really change a whole lot. We didn't have to implement any new standards this year, which was great. A nice reprieve from the GASB. So not a whole lot to talk about here. We did have a couple of compliance reports that we include in your financial statement packet. The first, you see every year, it's our yellow book report. If we ever have any findings or issues with compliance or anything like that, we report those in our yellow book report. Like I told you earlier, we didn't have any of those. You had a single audit this year, so if you spend more than $750,000 in federal grant funds, you're required to have a single audit. So we looked at your federal grant expenditures, no findings or issues related to compliance with the spending of those funds. And those two programs are your Clean Water State Revolving Loan Fund and your Drinking Water State Revolving Loan Fund. Words are a little difficult this afternoon. Some things I'm required to communicate to you all under government auditing standards. Just want to make sure y'all are aware we had no proposed adjustments, no past adjustments. Basically, when we got the financial information from the finance department, the numbers were right. We didn't have to propose or make any adjustments, and that's a great thing. We didn't have to have any consultations. We didn't have any difficulties in dealing with management, had no disagreements with management, had no new pronouncements that we had to implement, and just also want to make sure you all are aware that we're independent of the commission in accordance with all the applicable standards of our profession. And then just in closing, we do provide some value-added services only to our clients in the form of free continuing education and newsletters periodically. I just wanted to make sure y'all are aware of that, and I know that management takes part in those just as often as they can, which is great, and glad to have them. And that pretty much concludes what I wanted to report to you all today. Again, the numbers look really good as of June 30, 2022. Again, no findings, no management points. Certainly was a pleasure to serve you all, and we look forward to serving you in the future. If you have any questions about the audit, I'd be happy to answer those.
Commissioners, any questions, comments?
No, I don't think so.
I'll offer just a brief comment. To me, this is a testament to the very good work that our staff is doing. Dave, you get credit here. Score points right away. Been on the team such a short period of time, and so, we like that. So just now you set the bar so high, we'll see how you do next year too. But thank you, Trey. We appreciate what you guys are doing. We look at you not only as an independent auditor, but we learn from you guys as really we think of you as I do as partner to our success and helping to be sure that we really are doing what we're supposed to be doing. And you document that as we have. I like to keep it short and sweet, and I love this one when we have no findings. It's exciting to be unexciting. And that's a good thing when it comes to finance, right? Everything lines up. So, Trey, thank you to you and your team for what you all have done. And you can alert your associate that we don't need to have a call unless somebody asks for one.
Well, I will say with the call, we have a representative from Synovus here in person, and we have somebody available on the phone. Since we did have the investment loss that was mentioned in the non-operating income, wanted to make sure they were available if there were any questions about that. So that's up to y'all's discretion.
Well, do you want to talk about the operating loss a little bit?
I mean, we could discuss that at the financial statements because
Yeah, I think that's probably a better place to do
Yeah,
that.
and it's, to clarify, it's not an operating loss, it's an investment
Right.
loss.
Right.
An unrealized loss.
Unrealized.
Unrealized loss.
Absolutely.
So as far as our audit goes, I'm quite satisfied with what's been offered here, and if there are no other comments or questions, Trey, thank you again. Appreciate it so much.
Thank you. We're glad we made your job easy for you.
We will need the motion to accept the audit.
Oh, yes.
If you choose to do so.
I'll move that the JWSC Finance Committee recommend to the full commission the acceptance of the audited financial report for the fiscal year ended June 30th, 2022, and the authorization of its release to the public and reporting agencies.
And I'll offer the second, and since Commissioner Stevens is not able to attend, then we'll call for a vote. Those in favor, and it carries. So we'll move ahead. Thank you very much. And let me just make a comment about the rest of our agenda, most of the rest anyway, is we heard these things in the Facilities Committee and endorsed these items, so these should equally be quick for our
Yes.
committee. So
Right.
item 3, that was the proposal, contract proposal and acceptance for the tank rehab for 2 tanks, water storage tanks. And recommendation was to accept the low bid Tank Pro Incorporated, who has done business before. They did the last 2 tanks that we did last year. And so with that, I'll just entertain a motion from there.
All right, I'll move that the Finance Committee recommend the full commission award a contract in the amount of $1,396,617 to Tank Pro, Inc. for the elevated storage tank rehabilitation project for the Glynn Place Mall and Oglethorpe sites.
Okay, I'll second. Any comments or questions? Hearing none, those in favor, it passes. And item, catch up to my notes, and the next item was for the inspection on the construction process for those 2 rehabilitations. That item also passed through facilities. The staff recommends that we use the same resource, Chapman Technical Services LLC, as we have used significantly in the past. Their bid is $2,500 and cost less than what it had been to do 2 tanks previously. So that's directionally, that's quite nice. So with that, I'll entertain a motion to move this item forward.
All right, I'll move that the Finance Committee recommend to the full commission award a contract in the amount of $27,000 to Chapman Technical Services LLC for construction inspection services for the elevated storage tank rehabilitation for the Glen Place Mall and Oglethorpe sites.
And I'll second that. And not only has Chapman been the low bid, we have a relationship with Chapman Technical Services. Again, they've done work for us in the past and done it well. The inspection service is particularly important for us to have a specialist to perform this work for us, and it becomes an extension of our own inspection team. So, any other comments or questions? Hearing none,
We
we'll
have
take.
someone else climbing the tower.
Yep, we do.
Yes.
Thank you. That passes 2-0, so thank you very much. Item 5 is the Brunswick Villa Area Service Extension Project. Again, we heard that one in the last meeting and discussed it. This one is the plan to extend the Brunswick Villa, which essentially is Townsend and the side streets that are between Altama Avenue and Whitlock Street. And so this also supports our plan to expand into unserved areas and areas more specifically that had been skipped over the years. We're basically trying to fill in the grid, if you will.
Yes.
So this one helps us approach that. With that, I'll entertain a motion to move this forward.
I'll move that the Finance Committee recommend that the full commission award a contract in the amount of $486,780 to Kimley Horn and Associates, Inc. for engineering and construction inspection services for the Brunswick Villa Area Sewer Extensions Project.
And I'll second that. And just as a side comment for anyone that views this in a podcast later, you may see that our agenda is being moved across very rapidly, as we've had significant discussion on each of these specific items in the previous meeting and facilities by this same panel here. So it's not that we're trying to rush through anything, but we've all heard it. So with that, I'll take the vote, and it carries 2-0. Item 6 is the painting for the administrative building, the building that we are in, and we solicited bids on that, and staff is recommending the low bid of $30,000 go to C. Merrill Construction. Very brief background on that. It's our understanding that C. Merrill Construction is also the contractor that's working next door on the other half of this building, and conveniently, they are the low bid to paint this building, so it can all be done at the same time within the next few weeks. The comment I made in the last meeting was of the 3 bids, the 2 are definitely in market, the 2 lows. The third one is well out of market, as for what I know about local construction. And so with that, I'll entertain a motion to move this forward.
I'll move that the Finance Committee recommend that the full commission award a contract in the amount of $30,000 to C. Merrill Construction for stucco repair and painting services for the administration building.
And I'll second that. Any comments or questions or additions?
No.
Hearing none. Okay, we'll pass that one on. Item 7 is the Water and Sewer Improvements Project, change order number 1. That goes to that one. And Andrew, I'm just going to let you give the highlights of that, please.
Yes, sir. So in ARCO, we're extending some water lines and sewer lines. Determined when we were looking at the bid quantities that about 2,600 linear feet of water main was left off the bid form. So this is to increase the contract amount to include that 2,600 feet, as well as some additional gravity main due to a redesign that we approved easements for at the last meeting, and some additional clearing and grubbing associated with that, as well as a time extension of 135 days for delays for manholes that took forever to show up.
I'll entertain a motion.
I'll move that the Finance Committee recommend approval of change order number 1 to the ARCO Area Water and Sewer Extension to UWS, Inc. to increase the contract amount by $166,003.78 and contract time by 135 consecutive calendar days.
I'll second that, and with a comment is that one of the 2 significant items, well, both of them. One is the increase in price affecting the true price of the scope of the project. The other is the 135 days, and this is not uncommon as to many of the contracts we have experienced in the last 2 years. Is the supply chain continues to be a challenge for all of us. So I'm not particularly concerned with the time extension. Other comments, questions? Hearing none, all those in favor, and this passes. Thank you. All right, then item 8, declaration of surplus equipment. Andrew?
Yes, sir. We have 2 items here before you. One of them, the first one, is a 2003 Ford Ranger that was been used many years successfully by our Planning and Construction Division. We have received a vehicle replacement for that in last year's budget, so we're requesting to declare that asset as surplus. Believe we've got all the goodie out of it thus far. It's a 20-year-old vehicle. So we request is to declare that as surplus. And the second item there, it says 136 SCADA data flow systems telemetry control units. We did a lift station project last year to replace all of the SCADA units. These items were for a different system. We flipped from data flow systems to what's now called VT SCADA. These telemetry control units that we're asking to be declared as surplus will actually be utilized by one of the communities impacted by Hurricane Ian on the Florida coast. They had substantial damage during the storm, So we're gonna surplus these items and allow those to use them to get their systems back up and running in a much more expedited manner. As you know, with supply chain issues, trying to build new panels for these units would be quite a challenge right now and time consuming. So these will be used by them to help them get back on their feet. And we have no use for them anymore because we've changed SCADA providers.
Okay, Chair will entertain a motion.
All right, I'll move that the Finance Committee recommend that the full commission approve the above listed items as surplus to be disposed of in a manner most beneficial to the JWSC.
Second. And so, the Ranger would be disposed of through gov deals.
Right.
And then the SCADA items we'll send to the utility down in southwest Florida.
Yeah, they need 300 of them, so we're gonna get them almost halfway there.
Wow,
Is
that's
it
great.
just one utility that we're sending them to?
Just
or-
one utility we're sending them to. Dataflow Systems had a tremendous footprint in South Florida. So there are many communities in need, but all of these will be going to one utility. I believe it's Bonita Springs.
Okay, great.
All right, very good. Any other comments, questions?
Glad to do our part for those people.
Okay, all those in favor, show of hands, and that passes on. And then, number 9 is a contract award for the paving. We heard this one in the last meeting, and this is for the repaving of Arnold Road in the work area where we will replace a force main approximately 1,000 feet that we're replacing in there. And the repaving is, of course, a responsibility of us since we're putting the pipe in the roadway. And to note that we're also going to pave the full width of the road for that total distance. So with that, I'll entertain a motion.
I'll move that the Finance Committee recommend that the full commission award a contract in the amount of $95,375 to Allen Owens Construction and Paving, Inc. for the paving of Arnold Road due to the Pump Station 2002 Force Main Replacement Project.
I'll second that, and with a comment, Andrew, did we not have any other respondents on the paving? I mean, even call us and say, hey, we're too busy to even bid, or?
Most of them we reached out to would not even return phone calls or emails. A couple of them just told us they can't get to it. Because we have a tight schedule here, we want them out there November 14th. A couple of them told us they just couldn't fit that in their schedule.
Understood. Okay. Any other questions or
This
comments?
project starting after the game.
The Monday following Georgia-Florida weekend,
right.
and October 31st, we're starting, paving starting the 14th, so our crews are bound by the schedule that they've been given to get this 1,000 feet in the ground.
As soon as the visitors leave town, we're turning it.
Absolutely.
Okay, great. All right.
With that, I'll call for the vote, and it passes to the zip. So now we're into the discussion item, and Ms. Francis, you are up to bat.
Scroll down, just click on the link that says report.
Yeah,
Yeah, click on report, is that the email?
yeah. Oh, there she's, okay. There we go.
Good afternoon. The item before us is the financial statements as of September the 30th, 2022. As noted, our audit is complete. We are pending the final item from the auditors. They're waiting on GMA to get 2 publications where they can issue final, say it's completely done. It is completed for all intents and purposes.
And we expect to get that before our next meeting, next finance meeting.
People at GMA, they thought they were gonna have them like the end of last week, but
Okay.
still, and they are still waiting the assertions from their audit, and we're usually the first ones requiring these publications. So they have our email address, the auditor's email address, and they have assured us they will get it to us as quickly as possible.
Thank you.
Pending the acceptance, I went ahead and changed the column from June 30th, 2021 to June 30th, 2022. And I'll note a few of those as we go along. Our accounts receivable, June 30th was $4.3 million. That was GFA draws. Work was done prior to June 30th, and we received the funds in July and August. So we had to book those as receivables. As we received those funds, we reversed those receivables out. As of September the 30th, that is at zero balance. On interest receivable, $175,000. That was on our investments. We booked that as June 30th. We reversed out half of that on September 30th and the other half December the 30th. So we have already booked, reversed out, we received a portion of those funds already. Unbilled revenue, 1.7 million. That has changed like 17,000 from the June 30th numbers, but actually our unbilled revenue increased by 17,000, so it went up just a little.
Can you
Says
tell what
June.
unbilled revenue would, how does that defined?
It's consumption used, just not billed, because the consumer use it and we go out and read the meters and bill it.
Okay,
So during the month of July, we run a report on what the consumption was for June 30th as the bills come through.
okay,
So we normally do that once a year because it doesn't really fluctuate much, so that's a
right, okay,
generally a June 30th calculation.
okay.
On down to capital assets or construction in progress, 37 million. On June 30th, it was 21.2 million on year-end 2021. So a lot of work going on.
Mm-hmm,
September the 30th, it's already up to 41 point, almost .2 million, so an increase of 4.1 million. Down to current liabilities, accrued vacations and salaries, that was 754,549 as of June 30th. That was accrued payroll and vacation. The payroll, of course, was reversed out in July as that came up and was paid, so the 349,000 is just vacation accruals. That does not change to the year end. Fiscal year end. Long-term portion of capital leases, it went from 151,000 to 1.6. Due to the term, the interest rate, I believe it was, on the VACON.
It's the VATCON, right?
Yes. We went ahead and received those funds, so we had to go ahead and book an entry for those. And that went into, the first payment will not be due to September of next year, so it was booked in on time. The anticipated delivery for those VACONs is within the next 6 weeks.
Should be sometime early November.
nice.
Page 2. Our net pension liability, it went from,
If you'll click on that Excel sheet. So at the last meeting, there was some discussion on how the net pension liability had changed. So here's a 5-year look at how we were doing on net pension liability. So you see it increased a little bit from 18 to 19. Pretty good jump in 20. That's when we made the changes to the pension to extend the vesting schedule for new employees.
Right,
You see the decrease since then. So we're moving in the right direction now.
trending definitely correct.
yes, the 2.8 was June 30th, 2021, and then we added the 300,000, we paid 300,000 toward it from
Right.
last year, and then the 700 and some thousand, that was the pension for this year. Makes up that $1,038,000.
Well, and considering the state of the market, I think it's a good number for sure.
And that works out, I'll get that number real quick, we have it here. The question on the funding percentage, on an ongoing basis, that works out to 96.71% funded. On a actuarial basis, it's 88.5% funded.
Okay. So, as a general rule, anything over 90%
Is considered fully funded.
considered fully funded. Right.
Okay.
And we did look into, or we had a discussion about seeing that number like on a monthly or quarterly basis, but, that's a lot of actuarial calculation on their part, so they only do that once a year, so.
Which is fine.
I will say on a market value basis, instead of an actuarial basis, it's 110.67% funded.
Okay. Sounds even better.
Sounds a lot better, but, different measurements give you
Right,
different results.
Okay, million on June 30th, to 57.9 as of September. That is a change in the capital leases and the continued draw for the GIFA loans. Page 2, I'm sorry, page 3. For our operating revenues, we have the calculations for the expenses or actuals on the revenues for 3 months. I will change that wording on that. Again, we base it on a 4-year average. For sewer revenues, we're at 27.31%. Water revenues, 28.29%. Debt charges, 24.80%. And administrative fees, we're calculating it on 24.94%.
And that's based off of where we've received revenues for the past 4 years on a month-by-month basis.
Okay.
That brings them more in line versus the 1/12 allocation.
Right.
Starting to get a little worried about how accurate those projections have been. But they're working out well for us now.
I have highlighted the interest income here, and I don't know if this is where you would like to speak on our, the, interest income.
Interest income is where the fair market value of our securities investments gets adjusted. So that's where, for the year end June 30th, we saw the significant write-down that was per the auditor's report. Sorry. Was that
1.2 million.
1.2 million?
Right.
We've also seen since June 30th another over $400,000 decrease in the fair market value of our securities. This is something that we've only adjusted annually in the past during year-end audits and financial year-end close. It seemed, given the current economic climate and this very large movement in interest rates, which does have a very large impact to the fair market value of our securities and the impact that that has to our financial statements, that we will start booking those adjustments monthly going forward. That way we don't see as big a surprise as we did for year end June 30th, where we're cruising along at a nice level of revenue and then get hit with a 1.2 million drop. Of course, as time passes and the economy changes, things improve, we would expect to see write-ups instead of write-downs as interest rates decrease and the fair market value of our securities increases. Of course, as I said, this is not a cash transaction. This is unrealized gains and losses that basically, per the government accounting standards, are reported as part of income. And we do have our Synovus rep, Rhonda Davis, she's the SVP Senior Relationship Manager, who can speak more to this if you have additional questions or just would like a more in-depth education on that accounting and those investments.
Do have a question. Rhonda, I'll address it to you. Let's talk about it in real dollars and cents,
Well, there we
not
go.
unrealized losses or gains. What does this do for the utility from our financial position?
I think from a financial position,
Would you mind stepping to the podium so there's a mic?
let me grab a couple of pieces of.
Yes.
Yep.
Just so I have reference. I know you're bringing out.
Yeah, and because the question will, perhaps some of the commission may receive questions in the community. Hey, I see what you did on your finance statement. How does that affect us? And what does that do to your liquidity? Does it affect your ability to borrow money or spend money? Those kind of things. So if you get it down into real American dollars, what does that really mean?
Okay. First of all, thank y'all for allowing me to participate in this. I'm happy anytime that y'all need someone to represent Synovus to do that. But as you know, the Fed funds rate has increased 325 basis points in a 6-month time period. And so just generally speaking, when rates go up, the value of existing bonds go down. It's a teeter-totter effect. so that the portfolio, when you look at it from a valuation perspective, the value of the existing bonds in the portfolio have gone down. And as we said, this is an unrealized loss because your portfolio is a hold portfolio. We have these bonds and we will hold them to maturity, and by maturity, they'll return to their original value. So there is not a dollar loss when you're
Right.
looking at dollars and cents.
Right.
And so,
Just like equities trading, is the market value moves up and down, the ebb and flow, and you don't realize it until you get ready to sell it.
till you pull the trigger.
That day, that's when you know what it's going to do for you.
Correct.
And for us, and I'm trying to dumb it down, I'll use the same discussion if somebody asks me a question next week when I'm speaking on the strength of our finance, is that it doesn't make a difference because we're going to service the debt until it's mature.
Correct.
Okay.
And as y'all have done a very good job of creating a laddered portfolio, which helps to I don't want to say insulate from changes in the interest rates, but as some of the bonds mature, you're able to reinvest those into the higher rated bonds, the higher, rates, which helps the value of the portfolio as well. So certainly, y'all have done a good job at structuring it to do that.
I have a question then. So, in other words, what we did is we took the June 30th cutoff date at the end of the fiscal year and said, what's the value of these bonds as of that date?
Correct. It's a snapshot.
Right. So, as they mature, even though that number you have now is lower than when it matures, it will be back up to the full number.
Correct.
Okay, so it really, there's not money going out or losing any money.
No.
We're just simply waiting for the bonds to mature and
And
then
you
the
get
money will be
your
back.
money
So-
back.
And are all of our bonds done individually, or we have bond mutual funds, or
No, it's individual bonds.
it is all, no EFTs or anything?
I don't believe so.
No?
I
Okay.
think it's a
right.
individual bond
All
portfolio.
direct, right,
U.S. Treasuries, municipal bonds,
right,
a few other items that are
Some state.
in that same
right. Right. So, yeah, so I mean, they're all very safe, wise investments for utility because these are the monies that we need to have in reserve
Correct.
for things. So the accounting standards apply to government. Is the same accounting standards apply to private businesses?
No, and that was one of my questions. I'm like, isn't there another way for y'all to account for these? Because in other organizations, they can pull those out separate when they're buy and hold investments.
Right.
And account for them separately, so they don't impact the same
So
way.
Dave, you want to speak to that? Because you did some research into this.
Having just come from the corporate world myself, whenever we were going through this part of the financial close process and working on the audit, that was one of the things that popped in my head is, wait a minute, since we hold these to maturity, why do we have to show the fair market value impact on the income statement? In corporate America, you can classify your securities investments as held to maturity or availables for sale or trading. Trading being you're actively buying and selling securities all the time. Available for sale is similar, it's just not as active. And in those two instances, corporations have to report their securities at the fair market value. However, if your securities are classified as held till maturity and you demonstrate that your company has the intent and ability to do that, meaning that you're not expected to have a sudden cash crunch where you have to sell these securities off, you don't have to do this fair market value adjustment that is required under government accounting standards. And thus, the securities sit on your balance sheet at basically purchase value. And which makes a lot more sense to a layperson. It's like I bought it for $100 and I'm going to cash it in for 120 in 2 years or whatever. That makes sense to people. The trading activity in the market, it makes things a little murky. And as we see here, based on the accounting standard rules for government accounting, it has an impact on our income statement. The general philosophy behind that is very similar to expense accruals. dissolve the Joint Water and Sewer Commission today, we would have, work that our contractors have done for us that we would owe them money for, so, we book an accrual. If we dissolved the commission today and we had to to liquidate our securities all of a sudden, we could only get for them what the fair market price is. Thus, government accounting standards require us to present those at fair market value and thus make this adjustment periodically.
The thing that defies logic here is that government, I understand there's different standards for government because it's owned by the people. I mean, I understand that. But the ironic thing, it kind of defies logic, is the utility is run very much like a private business. Like the phone company, we get revenue, we provide infrastructure, we get revenue from our customers who use it, and that's how we keep things going. So, I mean, we're not like, we don't do all these odd things. We focus on delivering water to people and taking care of wastewater. And we have a lot of infrastructure, and we have a lot of money put aside. And it seems like we are almost penalized by having to comply with all the other standards that regular governments would have to, a county government or a city government or even a state government. And like I said, it defies logic in my head. And quite frankly, we had some excess funds that we were planning to use, and now we don't have them anymore. We were thinking about, shoring up the pension, giving some more money to pension, and consideration of some employee retention bonuses. And sadly, those things seem to be kind of wiped out by government, these standards that are set. So, but I know we have to live by them because those are the rules, so. But,
Yeah, Dave, how does that affect us? Because we're booking this market value, which is less than it was when we started, so we're showing a negative. How does that affect us when we get to the end of a fiscal year? We still have these bonds that have a life out here. So we still, assuming the market goes in that direction, it's a negative direction right now, then how does that affect us booking our reserves? And we have some restricted reserves, so that we put cash in it, excess cash, if you will.
I'm not familiar with what our rules on restricted reserves are. I believe probably there may be different rules for different types of reserves. But
We are booking the fair market value as the cash value in the reserve accounts throughout the year. So since we've started booking that fair market value once a month, you'll see the fluctuation in the reserve balances based off of fair market value. So you will see the ups and downs as we do that. So the reserve values will change, but know that that's a paper change and not a cash change.
right.
Yeah, what I want to be able to say is it doesn't affect our reserves, actual cash, because on the
Right.
restricted reserve, we use that for capital expansion. And while we've got we split up the excess cash, I'll call it, because some of it is defined to go in specific reserves each year. Because it's an unrealized loss presently, how does that affect our booking into those reserves and then actually having the dollars available to transfer to capital projects?
the amounts that are set in these different reserve accounts, how is that determined exactly? Is there certain percentages that are supposed to be?
Each year when we set our budget, we determine the amount that we'll transfer to those reserve accounts. So we do that as budgeted pieces throughout the year. So we will continue to make those same transfers throughout the year. I understand your question though is, okay, if we have an unrealized loss of say $1 million against a $20 million reserve account, yes, we have to reflect in the cash balance that unrealized loss is taken into consideration in that calculation. But it doesn't affect our ability to pay our bills. It doesn't affect our ability to borrow money.
Got that.
Right.
Don't have any concern there, but what I'm looking at is, okay, we went from, your example, 20 million down to 19 million
Right.
that we book in, and we spread it over multiple reserves. How does that affect our ability to self-fund some of these reserve projects?
It doesn't.
Okay?
Well, to that point, the way we fund projects, we budget a transfer to the R&R reserve each year. And we do not use this year's funds for this year's projects.
Understood.
We budget, transfer money, and then the next year, we budget funds off of that. So we're already conservative with how we're doing that project funding. I think this just makes us more conservative, which is good, because that gives us, even more assurance that we're gonna be able to fully fund all these projects.
Well, having laddered bonds, we're gonna have maturity dates that scatter out, so that's gonna do some true-ups laddered also. But by the way, we're gonna have more of those, so it's gonna be a constant churn. So what I was trying to say is it ought to have little, if any, actual impact in terms of cash, because we want to continue to be able to leverage our value through bond issuance or selling bonds, and then paying those off over time with our revenue stream.
The only thing we do have to watch for is our customer deposit reserve, because we are required for our cash and investments in that to match what our payables are come June 30th. So, we just need to make sure at the year end that,
Good point.
that we are kind of seeing where that fair market value is for that reserve, and make sure that we've transferred enough funds in there to offset that adjustment, so that our reserves equal our payables.
Also,
Okay.
kind of an extension of the question that you asked, in reviewing this and seeing how big the fair market value adjustment was for year end and how big it has continued to be month to month since then. We are also beginning a policy of not only booking the fair market value adjustments monthly, but also doing monthly reviews of our project costs and commitments and forecasting cash flows to make
Yeah.
sure that we are properly covered. Because that came up as a concern. You may recall, we were looking at the possibility of investing some of our overnight cash that is currently held in our truest cash accounts, probably in the tune of $4 or $5 million. The question, of course, was, okay, well, what is going to be the timing of large expenses for some of our large projects? Can we actually invest that? What are the optics of investing in that and then seeing 3/4 to 1% of that on paper shrink, because of fair market value adjustments on a monthly basis. And so we kind of came to the decision that we want to take a more active role of kind of measuring or managing cash and investments, not to the point of, one of us is going to become a market securities manager type of person, but we want to maximize the return on the monies that we do have for the benefit of ourselves and our customers and constituents, but also maintain a low level of risk and to be able to meet financial obligations as they arise, and just have a better understanding of what those are going to be 2, 3, 6, 8 months, a year in the future.
Rhonda, thank you for your time.
Thank you.
Appreciate
Can I ask
your
one more
answer.
question? How does this compare to the year before, the fiscal year before?
I think the market adjustment the year before was, what, 100,000, 150,000?
Okay.
600, I believe it was 600,000.
Oh, 600, okay. But it didn't exceed, it balanced out with what we had gained in interest, so it didn't
Right,
have the huge
yeah.
impact on the
Right.
year-end statements.
Yeah, I mean, the fact that the interest rates have been kept artificially low for so long
Yes.
really catches you by surprise.
Yep.
And all of a sudden, the Fed's being very aggressive with their moves. How many basis points did you say?
325.
325? Yeah. I
And
mean,
they're
that's
talking
Six
about-
months.
and
pretty
they're talking about another-
unprecedented.
We're talking about
And-
another 75 before the end of the year, right?
Oh, yeah, at
Yeah.
least.
Yeah, so I mean, and I guess, now we just have to live with that for now, but it'll get better
Yes.
as the cycle goes through, so.
Agreed.
yeah. Thank you for the explanation, I appreciate your
Absolutely.
help with that.
Yeah, Dave, to go back and follow on the comments you were offering about forecasting cash flow, et cetera. Yeah, I see that. That ought to be a discipline that we have anyway, independent of investment opportunities and pitfalls, if you will. I can remember one of my corporate experiences, we had a very robust construction program. And forecasting the cash flow was just important as forecasting when to start and stop projects. So you gotta know how much you can pull out of the pocket,
And that,
so you can afford what you're doing.
that's that next step in further improving our project management approach to, and moving forward as we're getting into some larger dollar value projects.
Well, yeah, I think it ought to be included, Andrew, in the discipline of the project managers.
Yes.
Is that, okay, we know about when it's gonna start, we ought to have that discussion with, the design resource.
All of our project managers will be included in those monthly meetings
Yeah,
going
so
forward.
then we're picking based on milestone completions. Here's the payments that are gonna come due, and then we're adding all those up. And then we know what our true margin availability is going to be for investment opportunities.
Yes, sir.
And we definitely identified it as a major opportunity for us to improve our processes and
Yeah. So good
Okay,
idea.
well, that's a good thing to include in your playbook. It's gonna help you score more points.
Exactly.
Okay, Francis, continue, please.
Okay, so we've had the discussion about interest income, we had touched on it, but since June 30th for September 30th, we had to book another 523,000 fair market value adjustment, and we do that per GASB 72. And it states that investments are reported at fair market value on the balance sheet, and changes are reported on the income statement. So that's how it affects us here. So again, it is unrealized gain or loss and non-cash, but it has to be reported balance sheet and income statement. With all of that, for September the 30th, we are under our projected budget by $207,000 for our revenues. At the bottom of the page, capital fees, we're at $560,000 for the first 3 months, and that is above where we were this time last year. And I believe this time last year, we were above where we were the previous year. So we are on a growth there that we'd like to see continue.
Yeah, and just to reinforce where it says operating revenues, the big one there is just the interest income is down. It's not our actual sales that are down.
Correct. Okay, on to page 4, expenses by division. As we were under budget for revenues, we're over budget for expenses. Again, that plays into the supply chain issues and our purchase orders. For a lot of these anticipated purchases, we went ahead and booked the purchase order, have ordered the product, and we're waiting because we know there are supply chain issues and lead time issues.
But we haven't paid the vendors.
No,
That's
not
correct.
until we
They're
get the
just,
invoice.
right, the money's just out there
It's
as,
set aside,
Set aside for
encumbered,
you.
is,
Right.
you take it out of the pot and you cannot touch those funds.
all right,
So when the invoices come in, then we'll move it from an encumbered to an expense.
right, okay.
On to page 5. This is a group insurance quarterly update. As of September the 30th, our total insurance cost, $364,500 thereabouts. Our budget for these first 3 months, $426,250. Expenses to $364,000. We are under budget by $61,800 year-to-date so far. Comparison for fiscal year 20, 21, and 22. We went from 1.8 to 1.5 to 1.473 as of June 30th.
Are those
So-
the final numbers for the?
Yes.
Yes? That's excellent.
Yes. And the final numbers for fiscal year 21 and 22 do include an accrual based on claims not yet paid, incurred but not, so that's pretty good. I think it was just a little less this year than it was the previous year.
Right.
Our budget for this year, let's see.
7 something.
Oh, for the June 30th numbers, I did throw that in there. 1.8, our cost 1.473, so we were under budget for group insurance for June 30th, 332,000. Pretty good numbers. And our annual budget for this year is 1.7.
Okay.
So we did drop that a little bit, and we do have the group insurance reserve set aside if we go over those budgeted numbers.
What, do you know what the number is on the reserves?
Sure, flip to the next page.
Oh, is it? Oh, I'm sorry.
Yeah, so on to page 6.
I'm ahead of you, I guess, okay. Okay.
So, Mr. Owens, our director, had spoke a little bit about the overnight cash versus investments. So at this point, it behoove us to keep overnight cash as overnight cash and not move that into investments at this time.
Basically, kind of taking a cash is king approach.
Mhm.
We expect interest rates to continue to climb through the remainder of the year. Probably
It's more
start-
valuable in the cookie jar than it
Yeah.
is put it in the market.
And find out we get a
at
further
least, you know, at least,
net market reduction.
Absolutely.
At least on paper, with the fair market value decreases that we would have to take between now and the end of the calendar year, possibly even beyond that, depending on how long this period of high aggressive inflation lasts. But it would, you know, we do want to start moving some funds out of cash accounts into investments, but we want to balance that with you know, the effect that it's going to have on our financial statements.
But we're gonna do the overnight investments.
Yes, you're still getting interest on
We're
those.
still
overnight.
getting those, right. And we'll root for the Fed to bump it up a little more.
You know, Andrew,
Get a little
one of
more
the
interest.
things that we might want to consider in terms of investment is looking at physical assets or parts. Is, if the forward curve for pipe is continuing up, it's worth more to buy it today than it is a year from now. So we'll be limited by our storage space on the things that we use a lot of.
Mhm.
And particularly on the projects that we already have approved and expect to have approved, we may want to purchase in advance. Let's figure out where to stockpile this stuff.
Sure.
I guess we can have some more conversations with Synovus in the future.
Well, that's a hedge, what that is,
Sure.
okay? So you put $1 million into PVC pipe or concrete enclosures, et cetera, and we get them on the ground here in 90 days, and we don't use them for 360 days, if the forward curve is suggesting that it's going to be more in that 360 days, it's a good hedge to go ahead and put the cash to work now. Because sitting in the cookie jar, it's worth 0 increase or decrease.
Right.
But if we take it from the cookie jar and we put it into things that are going to become assets later, even though it's just pipe right now, I see opportunity limited by our storage capability. You know, maybe we want to spend 20 grand over at Dunbar and clear out some space.
Right, sure.
Consideration.
To that point, I will note that we got some recent pipe pricing on some HDPE pipe that was very favorable, so we may take advantage of that opportunity while the pipe pricing is favorable. Thank you.
Okay, on the schedule of cash balances, we've talked about our investments and versus overnight cash. Governmental finance, you'll notice that is a new account there, so when we needed to close on the loan for the VACONs, they went ahead and created an account for us and deposited those funds in, and they called it governmental finance on the bank account they set up, that they deposited that in, so that's just what we labeled it, because it was governmental finance. BB&T Governmental was who we had the first set of VACONs from, so that is now at the 1.458 that we have for this loan, and that will sit there until the VACONs come in and we get that invoice. Below it is the group insurance UHC. That account usually has a minimum of $29,000. It is at $31,000 because when Hurricane Ian come through, we knew we were going to be closed on Thursday and Friday, and we get those invoices on Friday for group insurance, and we went ahead and prepaid. We spoke with United Healthcare, and they told us what the claims were for the Monday and Tuesday and gave an estimate on Wednesday, Thursday, and Friday, and we were just a little over on that. She calculated pretty good on that.
But we still pay weekly on those, is that correct?
Yes, so the next week we settled up.
Right.
But for the end of the month, it shows just a higher balance than we normally maintain there. On to page 7. Again, just a note at the bottom, the investment accounts reflect the fair market value adjustment. And that will give us, but you do have the investments amounts and the overnight cash amounts there. So when we receive our investment accounts from Synovus at the end of each month, our fair market value, we'll pull an extract from the website and match that and do a net of what we have June 30, the end of the month, to what they're saying the market value is on our securities and make that adjustment. So if you look at this number for capital improvement fees at 7.669, if you go to our Synovus statement for that portfolio, you'll see that balance as the market value. And again, we hold them to maturity, they sell, they take those funds and purchase new securities. Any questions? On to page 8. Our project report, and I forgot to highlight anything on here, so I do have a few notes. Project 704, Canal Road to Glencoe, that was completed and capitalized last fiscal year. Due to a timing issue, there was a couple of invoices we did not get till like late August, early September. They are attached to that project, so we did have to record it as expenses, and what we'll do is book another, we'll capitalize that $8,000 and drop it to the bottom of the page.
Yeah, I'll take the blame for that. I assume since the project finished in June, we would have invoices before September.
Yes. And again, it was just a delay with 2 different vendors that they did not get the invoices into us in a timely fashion. You'll notice on the capital, on the cash account, there are $404,000 for the SPLOST. We still have just a couple projects that we are, I don't know what the wrap-up time is, but
Well, the main
we'll
thing
use
is
most of that.
it's got retainage still in there for the North Mainland project because we're waiting on record drawings and finalizing all that.
Right. Project 2106, if you'll notice, it says Dunbar Creek Engineering. That project title will be changed to either design, build, or engineering and rehab. The scope of the project changed, but I failed to go back into enterprise and update the project title. So just so you know, we've not set aside $5.6 million for engineering. That is we will do an update on that. And I think for the October, Mr. Burrows, we've already done a purchase order on the UV lights.
Yeah,
So-
well, we had a purchase order in, but when you order the UV equipment, they require a prepayment for them to begin manufacturing. It's 30%. So you'll see a decent invoice coming in on that, even though it's not going to be here till next summer.
So next month, you will see a 3rd line item there for a different funding source for that project. You'll see an R&R bond and then some type of ARPA funding there. And then we'll have to track that separate because it comes from different funding sources. On to page 9. Sorry. Reached to roll forward. And there's the $404,000 on the computed cash balance. So 394 of that, almost 395,000 is encumbered, attached to projects, so that leaves $10,000 not attached to a project at this time, but I'm sure some extra cost or something will cost a little more that may end up using that up. If you'll notice over to the left, under each of the reserves, there's the fair market value adjustment, and those are for the entry done June 30th, because it was calculated into the total. I did just want to note there what that was for each one. Of course, the biggest one was the R&R reserve, not listed on this paper because they do not affect the project report per se, is the operating reserve, group insurance, and the customer deposit reserve. The operating reserve
that fair market value was $613,000, so that was the second biggest adjustment. Any questions? Okay. Page 10. So I have added that takes care of the September 30th statements. Page 10 and 11 is just a quick review of where we stand as of June 30th, now that our audit is complete and all of our adjusting entries are done. Again, as mentioned earlier, interest income, that was the big hit. It is required to be reported, fair market value. I have notated personnel expenses. We did come in under budget there. So for departmental or operating budget, we were under budget by $330,000. But by the time you take into account the interest expense, bad debt, the transfers, that would bring us to the loss of like $100,000 short. But for the interest expense, I believe it is, bond issuance costs for the new 2021 series bonds that we did last fall, those issuance costs were $366,000. We did have to record that as an interest expense all in the year that it was incurred. So that is part of that. Page 11. Again, and it's just a quick, just a review of a snapshot of where we stand. The debt, we also did have a debt service payment on June 30th for the 2021 bonds of $241,000. I don't think that was budgeted in there at the time, so that was what caused us to go over budget there on the interest expense. Was the bond issuance cost and the debt service. Any questions?
What is that number? I can't read it on my copy. Is it 508 or 608?
Which one, on the interest expense?
Interest expense?
600,000,
219.
Thank you.
And just to revisit that for a moment, you'll remember how quickly we went through that bond issuance process. The first mention that I recall of it was at a May board meeting, and we obviously at that point had already completed our budget for the next year. So then we had the issuance in September, so we didn't have an opportunity to budget for that. So it wasn't an oversight, it was just the fact that we were moving so quickly with that issuance.
Yeah, I don't have an issue with
Considering the size of the fair market value adjustment, to have was net revenue loss of, paper loss of only 100,000 reasonable.
And you might have noticed in some of the previous financial statements, the bond issuance were just recorded because I wasn't sure in years past we'd been able to amortize those. Well, GASB stuff changed, and now we are required to just count it as interest expense in the year incurred.
Thank you for the report.
Thanks, appreciate the detail and the discussion, and Dave, just a comment for tomorrow's meeting. Might get some questions high level, and I would keep the answers high level. I would not pull this out, because that's a lot of granularity that's available to any commissioner today. You know, if their schedule had allowed them to attend the finance committee. That's really where we want to have these discussions down at the dollars and cents. At tomorrow's meeting, if it comes up, we ought to be talking about how does that affect our $33 million budget on an annual basis? How does it affect our transfer and reserves or our ability to leverage our capital type thing? And that's where I would keep it, okay? Thank you, Francis. Appreciate it. Any other questions or comments for the committee level? Chairman?
Andrew, can you tell us what application is outstanding for funds?
Yes, if,
Also,
okay, we applied for grant funding. We received grant funding last year for a wastewater project. They had a new round of grant funding through the Office of Planning and Budget at the Governor's Office. We applied for 4 grant opportunities there. One of them would be to, and all of these we have proposed to match 50% with reserve funds and 50% with grant funds, because matching was considered as a portion of the application. The first project would be the Canal Road well site, which we're fixing to convert over. So we've applied for funding for that. We applied for funding for a new elevated storage tank at exit 42, which we'll hopefully at next month's meeting have something for property acquisition for that tank site. We applied for grant funding at exit 29 to put up an elevated storage tank and convert an old firewall there to a production facility. And that's actually listed as a SPLOST project. So if we get that, if the SPLOST passes and we get that grant funding, we'll be able to offset some of the SPLOST costs there and use that available funding to do further water and sewer extensions. And then the fourth project was a potential elevated storage tank out in the Sterling area.
And these are grants, you say?
These would be grant funds. We would front the money and they get reimbursed.
Okay.
I suspect they will be awarded prior to at least November 8th, if I had to guess. Certainly compared to what you could get in the open market right now. Sure. That's correct.
Yeah, purely from the Finance Committee's point of view, I'll offer this, is we're currently leveraged at about 25% of our value. And Andrew and I had this discussion a little while ago during the break, is that other utilities, even much larger than us and smaller, are leveraged at a 50%, 60%. Not uncommon for utilities. When I worked in the utility industry, that was typical. So we ought to know how much can we afford in debt service to get us to 50% leverage. Because our value is very good, so we ought to put that to work. And that may allow us to advance our 20-year plan to serve more of the areas that have been skipped over the last 40 or 50 years in our community, and provide the service to those areas if we can manage the debt service.
Sure.
Particularly when the debt service from GFA is in the 3/4 to maybe 1.5%. So that's a good way to do it, in addition to what I mentioned about hedging on materials.
Sure.
Where it's practical. Okay, so that'd be a good number to know, and a good charge for the next commission going into the chairman's planning session that's done each year in January or February. Kind of set the pace there. Sure. You had another question? Okay.
No, nothing from me.
Anything else? Staff, anything?
I do want to just point out great work by our finance team throughout the last year. Got a clean opinion. Ms. Francis did a lot of the heavy lifting there. Congrats to her for getting that done. And now that we have Dave on board, I fully expect that to continue. So great job all around by all 3 members of our staff here in attendance.
Thank you.
Thank you again. And Rhonda, thank you for your support.
Yes, we
Appreciate it as always, as a partner in our finance opportunities. With that, we'll be adjourned. Thank you.
All right. And we are adjourned.